I was worth 8 figures when I walked into jail, and I was worth negative figures when I walked out. Meme coins are absolutely the easiest way to make money in crypto.
How much did you make in meme coins?
Low 7 figures.
Do you have any coins to chill before you leave?
I'm trading long right now. We got into a couple of days ago. Big bag. If you're using leverage on meme coins, what you're saying is that meme coins don't move fast enough for my liking, and I'd prefer something with a little bit more action.
All right, today it's my pleasure to have Scott on the podcast, a guy that went to jail, who was a digital kingpin, who had some accusation of drug dealing, drug making, but now he's clean. He's just trading meme coins like all of us. So welcome, Scott, on the Circle Jerk podcast.
It is my great pleasure to be here on the Circle Jerk podcast.
And do you feel proud now to trade meme coins? After all this, you finally do something that is presentable in society.
This is deeply, deeply embarrassing to me as a man.
As a 50-year-old man, you do Brazilian Jiu-Jitsu as well.
As a 50-year-old man, I think it ought to be, if you have any sort of self-reflection, deeply embarrassing that you're contributing absolutely not one single thing to society, except for farming and rugging people stupider than you. And sadly, we have the morals we can afford, and meme coins are absolutely the easiest way to make money in crypto.
Yeah.
Not
How much did you make in meme coins roughly as of today?
7 figures.
Low 7 figures.
But I've got another. I do mostly sensible, systematic, fully automated, algorithmic trade. But what I do is in my personal account, I trade meme coins because our automated systems do like 93% a year on average. Haven't had a losing year, been going for 5 years. It's very safe and steady, but, well, it's not safe. But you get a year like this year and you're making 93% a year and some idiot's making 1,000% in fart coin in a week. And it feels like you're going backwards. So what I do is I allow myself a small amount of money and I just gamble the most irresponsible way that I can, as long as I have edge. So I won't take a trade just because I like a coin or I think that's a cute cat or a cute dog.
Wait, you need to believe in something, Scott.
Dude, you need to shut the fuck up. That's what you need.
You need to believe in what I hold.
Fucking scam. If you think that motherfucker's not going to dump on your head, you need to grow the fuck up.
Yeah,
there's an aspect to holding. Like I hold some Retardio. Like I've held it like right from the start, but I hold it on a basis that I believe I have an edge, and the edge comes in the holder distribution and the way that the big holders aren't selling out, and the community grows, and the meme becomes funnier over time. Like there's actual fundamental reasons for holding. For example, Retardio.
Yeah, I mean everyone have fundamental reasons to hold their own coin. I think.
Yeah, but I mean, you know, if you're talking about like a derivative coin like cat with hat or like whatever, 500th stupid dog token or like how's that going to work?
Yeah. So how did you ended up trading meme coins actually? Because like normally we see like 20 years old people trading meme coins. Because I know you for many years, and I know like so. To give a quick background, because otherwise if I ask Scott to tell his story, it's going to be super long again. And trust me, an old man telling about his old days, no one wants to hear that. So basically, he did a lot of shit, went to jail, couldn't get a job, and then so decided to go full in trading. You traded TradFi, so that the Forex market, I believe, at the beginning, some stuff like that?
Mostly futures.
Mostly futures, okay. You traded that, and then after you went into crypto around, because your friends were getting rich, so this like 2018, and I think we met in 2020, something like that, where the second big bull market happened. Now, what made you want to trade meme coins? Like, what is today your trading strategies? What do you have? Like, do you have everything in meme coins, or you have other stuff?
No, my money is in fully systematic trend following trading. And I've got a big spot bag of hyperliquid. I've got a spread of, decent sized bags of some DeFi stuff. And I've got some meme coin cult coins that I hold, and I actively trade. The part where meme coins go from being solely on chain to being on-chain with exit liquidity through perps is very, very interesting. And the transition between those periods, there's a lot of edge because it's a completely different game, right?
Okay, so let's explain that in details.
Okay.
So when the meme coin is on chain, we mean like it's been launched on Pump Fund, for example, and then we trade it on Radium or Meteora, which is like decentralized, a liquidity pool based exchange. And then you talk about when they come in perps. So that means like a future. So we can long it with leverage, short it with leverage, make money in both ways.
Well, and more importantly, the first thing you do when you buy a 400K market cap shitter is go and check who else is in the trade, right? You want to tag all those wallets. And if they start dumping and the price goes down, you probably want to aggressively dump as well. The smart way to get out, so it's very difficult for someone to get out on-chain without triggering an on-chain cascade.
Yes.
Once we have perpetual futures, the derivatives market, the perp future market, is typically much more liquid than the on-chain market. And also, so if I'm holding, let's say I'm holding some Filecoin, and I've held it from 20 million market cap to $1 billion. If I sell on chain, I've got problems. But if I wait until it's listed on Binance and Bybit and places like that, I can short the perp and hold the spot long and the short perp and probably still earn carry income from that, from the funding. And it's a much more efficient way of getting out of a trade. So anyone who's smart, and it's like an IQ test. Like if you're smart and you've got a big bag of something, you're going to be shorting it in through the perps, because after you've shorted it through the perps, what you can do is then dump on chain, and your short's going to make money, right? Like it's a in fact.
Okay.
So let's say you own. Okay, so for example, let's take Retardio, which is at 50 million market cap today. I get a few $100,000 worth. If I was to dump that on chain today, the price would drop by 25-ish%.
Mm-hmm.
If Retardio had perp futures listed, which it doesn't, well, it does have some crappy ones. If it had a Binance and a Bybit, I could load up to 200% of my value short in the futures, and then I could dump it on chain, knowing that exactly that I'm going to crash the market and I'd be overshort for it. And so this is what we see a lot of with new listing launches. The desire for exit liquidity in crypto and in meme coins is king because, you know, for example, we were in this coin together a couple of days ago, Mitch, that went 100x in, half an hour or something?
Yeah.
But only 15 grand worth of coin changed hands during the spike. So you can't get out. It doesn't matter that it went 100x. You can't get out in size. Like, it doesn't matter. Like, as soon as anyone tried to sell, it's going to get down.
Yeah, there's like, it's true. I mean, the size in the liquidity pool by the definition of how they are launched, all those coins, is quite thin liquidity in it. So you can't sell that much. That's really interesting what you just shared. So you would wait for a listing and then you would short your own coin. I mean, the coin that you hold.
Well, that's the good theory optimal way of exiting a larger position. Like, it doesn't matter if you're swinging around $5,000, but if you're swinging around something that's going to move the price, then you have to do that. Like, there's no way that Murad can sell his coins. The only thing he can do is short them and then dump them on chain and crash the price. Like, that's
And then you would short it with some leverage, or like, how does it work? Tired to be listening to this all night? What about listening what rich people are actually doing it on chain? That's what Stockchain can let you do, because they monitor all the smart money, do wells, and they let you know what they're accumulating, what everyone is dumping to be ready to pump the price of the next meme coin. Go ahead, go on stockchain.com, and you're going to get your alpha delivered right into in finding the best wallets, and maybe you're going to find Scott Phillips wallet. Now let's get back to the podcast.
You get leverage, but leverage is generally not that great an idea to use because meme coins are so volatile anyway.
Okay.
If you're using leverage on meme coins, what you're saying is that meme coins don't move fast enough for my liking, and I'd prefer something with a little bit more action than meme coins. And, you know,
Yeah, it is. It is. It is. But this is where we go. This is where we are heading, anyways. Because
horrendous edges there.
yeah.
Anytime where there's people getting liquidated, there's people. So let's talk about what edge is. So, in my view, you should put on trades when you have an edge, and you should take them off when you don't have an edge. So if you're just holding it because I've got a bag of this, that's retarded. You should hold something, whether it's short-term or long-term, because you think you have an edge, you've got some prediction of higher prices in the future or lower prices in the future. When you don't have an edge, when you're just random gambling, you should take your shit off. Because, I mean, the thing that I see with meme coins is, it's very easy to make money. It's very hard to keep money. It's Hotel California.
Oh, yeah. Dramatically hard.
Dramatically hard.
Yeah. As soon as you win, you start to gamble more and you lose it all.
So there's a spot here, considering most of our counterparties, most of the people we're playing against, we're not playing against professionals, right? Like, the big advantage of meme coins is there's no Citadel, there's no Susquehanna.
Wait. You're telling me that the guy with a monkey picture is not the professional?
Yeah, it's amazing. And these 20-year-old kids, launching multiple rugs a day, no math, statistics, don't know the first thing about trading. It's like putting them in a ring and letting them fight against me. It's like, you sure? You sure there isn't an easier fight down the street? This is the easier fight down the street, by the way. Meme coins are the easiest fight.
Yeah, it is. It is like the best thing to trade for.
If you're starting off with almost nothing, it's different if you're starting off with a 7-figure stack. But if you're starting off with nothing, trying to work a stack, fuck, I wouldn't do anything else.
Yeah, I think like the counterpart though is that a meme coin is gonna tell you really fast how bad you are.
Mm-hmm.
Like you can wait for 6 months, 1 year in the stock market and realize, okay, I'm not really that good at stock picking.
Well, the stock market, you'll never know, because statistically, it takes about 20 years to know if you've got an edge or if you were just randomly lucky.
And if you wonder this question, you know that you were randomly lucky. Like, I think you should.
No one has an edge in stocks. There's tens of thousands of people who are way smarter than you, gainfully employed, like arbitraging prices back and forth, and you've got to be smarter than all those guys. Like,
is that why you left the TradFi market?
Oh yeah, it's just what I was in TradFi for a long time, and I'm good at it, and my compounding growth rate over 15 years is 13%. So I've underperformed the SPY. I could have bought, and I mean, I'm diligent with this, like I work. And so 15 years at 13%, it's like less than what someone who just dumped it in an index fund would have got. And that's just the truth of it. And but I come over to crypto, and it's like there's all these drunk motherfuckers, like true retards. And so what do we need to have edge? We need to have people willing to trade at bad prices.
Yeah.
And there's a number of structural effects in crypto that enable people trading at bad prices. Firstly, how much money you pulled out of crypto. Like if you have that, like fiat, most people don't even have a fiat off ramp, right? Mm-hmm. They think, I'll set that up later when I'm done making all my millions. And then they never do. So the capital that's the best thing. That's the best thing. So the capital that comes into crypto is one way only. It's like my butthole. It's exit only, right? So what happens is a little bit of money comes into crypto.
I just got the same text.
Comedian, you should
Came out of nowhere.
out of nowhere.
Oh, maybe it's because I can't relate. Maybe mine is not exit only.
The capital is sticky. As in, once the capital gets into crypto, it's a black hole. No one's ever pulling it out. Yeah. And so what that does is it means that a little influx of money, like when Solana pumped last year from what, $16, $8 to 100, that little bit of money washed around the Solana ecosystem. And we see that we see that stickiness both as crypto as a whole and on-chain specifically. So the Solana wallet and the Solana meme coin trading experience is much better than all those other crappy chains, right?
Yeah.
So, like, I had to bridge $500 I left on AVAX for some stupid reason the other day, and it took me 2 hours, and I gave up. And the only thing I took away from it is I fucking hate AVAX and everyone associated with it. I hope you fucking die and die poor, and I just want to short your chain because there's absolutely no fucking future at all for AVAX chain whatsoever. I'm a fucking professional. After 2 fucking hours, transfer my AVAX out. I didn't have enough AVAX in for cash. I had to do some entire language retail bullshit and buy like $20 minimum worth of AVAX with my credit card, and it was just like, I fucking hate you, AVAX. Fuck you.
Yeah, it is horrible. I had a similar experience recently. I wanted to bridge from a base chain to ETH, and the process was so stupid because I was on the bridge recommended by base chain. I click on it and they say, "Oh, you don't have enough ETH to do this."
Exactly.
And then it's like, "But you motherfucker, you know I have ETH on the other chain, so just make me like auto bridge it in one transaction and you get it all." And no, I had to bridge manually and do this and do that, and then it took 30 minutes to an hour just for that. And I was like, and then it's like, wow, I just forgot how complex it is to use those Ethereum virtual machine, like those things, like just unusable.
And so downstream of that, we have people who are stuck on base chain are going to keep trading base memes, that capitalist.
Yeah.
That stickiness is people doing an illogical thing because it's easier and more convenient. And price insensitive trading is where edges come from. So you need to trade with edge. And we can predictably say that when an event like, say, remember when Dog with Hat took off or Bonk took off, that extra profits sloshed around within Solana meme coins, just mooning like this and randomly mooning the next one. And it's very easy to ride those waves up. So when we see a mass liquidity entry event, like a couple of days ago, Trump onboarded a whole pile of the dumbest fucking boomers to ever boom. I mean, their money, I want every last cent of it.
Yeah.
I mean, those.
Yeah, I mean, I got some messages. It's like when you see most of the people in crypto, you're like, I don't, yeah.
Hospital.
It's crazy. So yeah, now it's gonna be like, plus like they're greedy and they will never self-reflect, and they're gonna find someone to blame.
Okay, so let's talk about that a little bit. We've got sticky capital, we've got sticky as a whole, we've got sticky as an ecosystem, as on a chain basis. We've got price insensitive traders. We've got people making their identity a coin, like the XRP army, like. If there's
that remind me the Cardano app.
Oh my fucking God. I mean, you think you found the dumbest fucks in crypto, and then you'll find a new little pocket of them on Twitter. It's like, wow, even for crypto, you can't so dumb as a fucking, like the BSV guys.
Oh, yeah.
I mean, that is the greatest trade ever. Like long Bitcoin, short BSV is the greatest trade.
Talking about greatest trade, what's your best trade ever?
Coco earlier this year. Had a multiple 7-figure win on Coco. It was
what is that?
Chocolate, black gold, chocolate. I still trade TradFi. Most of my money's in TradFi.
Oh, Coco, like, oh yeah, I'm in the Matrix. Oh, so oh yeah, interesting, yeah.
It bought me a new house, dude. It bought me my dream house.
And then when was that?
Start of last year, so.
In 2024?
Yeah, okay. April, May, I started cashing in.
And why did you get into that trade then? Because if it's TradFi, how did you get an edge?
I'm a trend follower, and statistically, and we can talk about how this relates to crypto, the things that have gone up the most in the recent past are statistically the most likely to keep going up. So what you do in TradFi is everything that's gone up, you buy, and everything that's gone down, you short. And in crypto, that works, but it works best on Bitcoin, slightly less on Ethereum, slightly less on Sol. And it, not only does it not work on the shitters, but it negative works. So there's very interesting things because technical analysis, right? Like drawing lines and squiggles on charts is downstream. That works. You know how that works sometimes, but not all the time?
No.
Like, well, it doesn't really work, but it works well enough when you have really strong momentum effects. Okay. In the smaller a coin is, the less momentum effects we have. So, for example, there'll be very strong momentum effects with a high cap meme coin like Trump, or something that's gone mainstream like a Encore, a WIF. There'll be negative trend effects with anything that's in the trenches. So what I mean is that a pump is statistically much more likely to be followed by a dump, rather than, whereas in a bigger coin, a pump is more likely to attract attention and cause a bigger pump, right? Yeah. So we have very, very different behavior. Now, the upshot of that is twofold. First of all, when you see the liquidity, when you've got a shitter and it's going up, you've got to be taking profits, because it's not going to last forever, right? Like everyone knows.
Yeah.
The second aspect of it, which is underappreciated, is when you see perfect looking charts with like bull flags and technical analysis patterns in a sub 1 million market cap shitter. That's a work of fiction. That's crime. That's 100% crime, because it doesn't happen in nature. And it doesn't happen because we've got negative momentum effects. So when you see that, you immediately go, wow, some motherfuckers, because you can take you could take a 100K market cap coin and you can make it stand on one leg, do a flip, pull its cock out, back in, look however you want, just with spending a little bit of money to buy and sell. It'll turn it for you. So when you see someone spending money to make a thing look like a picture perfect, like technical analysis by trap, it's like, okay, I like that, because they're not just holding a bag planning on dumping it. They're actually smart enough to spend money on their crime. So so you sit watching Dex Screener and you see the transactions coming through, and as it goes down, you'll see some wallet start to like mash the buy button to hold it up. And then you tag that wallet and see what else they're doing. You go, okay, wow, you guys have spent like $5,000 today trying to hold up this shitcoin. I see what your play is. And you can kind of know that if they're spending, they haven't just like bought a bag of a shitcoin hoping it goes up. They're spending money to make the shitcoin go up. And then the obvious plan is they're going to exit at some point and dump on your head, right?
Yeah.
So
the money invested in this is crazy. And I kind of feel like it's one of the time, because I know nothing about technical analysis, as you know, and then I'm quite happy that I don't, because like this I don't get biased. Otherwise, I would be like, oh, there's a resistance here, when it's like, I know that fundamentally, like everything that is below $50 million market cap is only driven by top holders.
Yes, exactly. Okay, so let's talk about that a little bit. If I'm a guy who's worth a reasonable amount of money, there's absolutely no point in me playing in shitters unless I can get a 10x. But by the time something's in a 20 to 50 million market cap range, is that about when serious? Probably 50, really. That's about when a serious investor can take a long-term position and let that play out over 6 months, because he can't even get in without moving the price before that. Mm-hmm. So there's a different game for like trench game, medium cap game, which is things like, Sigma, Retardio, Lock-in.
Yep.
Michi. Yeah, Michi's the perfect one right now, right?
Yeah.
And we saw what's today, 28th of January. We saw everything else in crypto dumped hard yesterday. And there's this little on-chain shitter Michi, stupid fucking 10th derivative cat coin. Not only is it not going down while everything's crashing, it's going up. It's like, whoa.
ID up, yeah.
You sneaky fuck.
Yeah.
Sneaky fucks.
I mean, that's the thing, yeah.
Yeah. That's the game, right? It's like identifying people trying to run a scam and beating them to it.
So how do you analyze those things on chain? Like, what's your go-to?
Well, I usually
for Michi.
Well, I use stalk chain stuff, which I really like. I recommend, not just because you're my mate. Like, I think it's really good software. Most of my stuff comes from being in group chats, and some guy will say, "Hey, check this fucking wallet. That doesn't look right." Like, if you're getting into this, get into group chats and make yourself useful. Don't be fucking. Don't be a dumb fuck. Don't be don't be begging for trades. Make yourself useful. Find wallets that are doing sneaky shit. Find cooks in progress. So a lot of my shit comes from the group chat. A lot of it comes from Stalk Chain. And I also like looking for edges on the short side, because it's sort of axiomatic that the most edge is where it's hardest to monetize, and most people are long only on shitcoins. So as soon as they get listed in their short side, you tend to see very big dislocations and lots of edges on the short side. So if you were to on average short every listing after a reasonable time period, you would make money. Like if you just waited 5 days after every Binance listing and shorted them all 5 days after. That would
I was tempting to check that as a metric, like, because I feel like it's always, we get so emotional. Oh yeah, it's going up, and then the thing is,
on average, I don't.
Yeah, can we say even on average or all of them? All of them at some point.
Because your recency bias, because in the last 3 weeks, the Binance listing team has just gone straight crime. So every fucking thing that's listed on Binance for the last weeks has been down only.
Yeah, but we could also take like what's listed as perps on Hyperliquid. Like they had Vine I think Vine is probably down. It's like all those things, like you gotta check this. And then this is what you talked about before, where when the liquidity is in and it stays in that market kind of thing.
So the mechanical way of seeing it, right? If you plot on a chart the spot market and the perpetual futures market. So if you're in TradingView, you click plus and you add another series and you add, if you're talking like US Fartcoin USDT, add Fartcoin USDT.p. And those lines should track together very closely because the funding rate mechanism should stop them getting out of track. The only way those lines can separate is when someone is price insensitive dumping on the future. And remember, 2 things. Price insensitive dumping on the future is your game theory optimal way to get out of a big bag. So only a smart cunt will do that. And second, if the guy who holds a lot of the coin is dumping out in the future, dumping as hard as he can, that's the only possible thing that can cause a persistent dislocation between spot and futures price. So when you see that persistent dislocation, you know the insiders are holding, and you know the insiders are holding and trying to get out in a way that they can get set on a short position before they dump. Because let's say you've got a $1 million Fartcoin position.
Yeah. Do you want to show it on screen maybe?
Sure. Okay, let's look at... All right, so let's look at Millionnaire. It's all down only bullshit. So let's look at the Binance Perpetual future. And...
Okay.
So see right here.
We have Melania Trump.
We have Melania Trump, and we have... That's not right. That's another... Do I find the... Was it a Solana coin, right?
Yes.
So it shouldn't be. I'm just trying to find the original spot listing for it.
I think it. I don't know if it was listed on major exchange. I think it was listed on. It was the way it's listed. It's just on Radium.
Yeah. Anyway, the idea is that you should see this normally, but when you see these get completely out of whack, which is quite rare, you can be sure, sure that someone is dumping in size. And it's a very, very strong edge to dump along with them because they have the keys to the kingdom, right? Not only are they shorting in size, but you can make a reasonable guess that they hold a big spot bag so they can dump the spot whenever they want as soon as they're short enough that they make money from it. So you can make money, so you can make a profit from rugging your own coin. Usually if you rug a coin, you're going to accept like 50% slippage, right?
Yeah.
This is a way to rug your own coin without getting slipped and to actually make a profit from the whole rugging process.
Okay. So when you say go out of whack, it means like one line would go
Usually,
different side than the other one?
usually the perpetual future will go down the other one, and this shows up in very, very high funding rates.
Okay. Funding rate, define this, please.
It's different on every exchange. So the funding rate is the mechanism that they use to treat perpetual futures like real things. So basically, if the funding rate is negative, longs get paid by shorts.
Okay.
Longs get paid for going long. So, for example, Fartcoin right now, we just got long and we just got paid for being long. Ordinarily, you get paid for being short in something where most people are long Fartcoin because they think it's going to go up. You'll get paid for taking the other side of that trade because there has to be someone on the other side of your trade. Otherwise, who's going to take the other side of your trade? So for perpetual futures, every buyer has to have a sell. You have to have
because it's a zero-sum game, right?
It's a zero-sum game. And
game.
who would take the other side of that trade when when Trump's going from 0 to 80 billion? So let's start with the daily chart, and who would take the other side of that trade? You would have to be paid a lot of money to do it. Now,
yeah, because that feels like a risky trade.
Yeah, it's a very risky trade to take. And so if we look at, say, OX, it is really a good, it sounds weird to say, but Colin Zhu's exchange is really good for trading all this scammy bullshit. So if we look at the recent history of Fartcoin, how much it's been paid, so we're getting paid to go long. For the last 5 hours. That means that everyone else is short. If we go back in time, like you can see you were being paid to go short, like 450% a year, paid hourly. Like that's a lot at some point. And if you look at the times when funding flips from negative to positive, that gives you very, very good insights into what's going on under the surface. And so this is part of the reason why the meme coin game gets so different when we've got perpetual futures listed and when we haven't, because you've got guys who are still thinking it's the trench game, and it's not the trench game anymore. It's a completely different game. There's other people on the other side of your trades.
Got it. Yeah, that makes sense. And then I would be interested to see, like, if for Fartcoin, for example, if you would use any on-chain data or not, because it's traded on a lot of centralized exchange, I think.
Okay, so the on-chain data becomes progressively less and less important once we have excess liquidity, because the smart play is to dump through that centralized liquidity.
Do you think then monitoring how much capital of a coin is flowing through an exchange will be interesting? If, for example, I see, all right, we have Fartcoin is getting listed on Binance, is getting listed on Coinbase, and we see that 20% or 30% of the supply is getting sent to that exchange.
So if you're a Fartcoin whale, would you send your Fartcoin bags from your public Fartcoin address to the Binance address, have it show up on an alert, and then have people dump in front of you? Or would you just take a brand new account and short using the perpetual futures, using USDT as a collateral, and have no one know that what you're up to until it's all?
It depends how smart you are.
There's no real reason to do it the non-sneaky way. So in my opinion, the on-chain stuff is really amazing when you're in the trenches, up to when you've got fourth tier listings and third tier listings, when you've got MEXC and Gate.io and,
Are they real listing though?
Yeah. We were talking about third tier shitcoin casinos.
Yeah.
Which, by the way, if you're going to trade, you should have accounts at all these fourth tier shitcoin casinos because there's more edges on them.
Yeah.
I prefer to trade at ox.fun. Greasy fucking greasy place. Like, but for this stuff, it's ideal. Like, you know, if you, it's huge edges.
Could you walk us through, like, how do you find your place normally then for those kind of thing? First, like, do you trench? Like, do you invest?
I say that I don't, but every now and again I do. By the way, there is very strong. Let me show you something cool. I say that I don't trench. So over the last 1 month, you can see that we've got very strong negative seasonality on Sunday, and no one makes any money on Saturday, and Friday is a great day to do it. Over a 3-month period.
Is it which time zone? UTC? Okay, so that's you. Okay, got it.
And so if we look at us over a 6-month period, we have profoundly negative average returns over the weekend. The weekend is not a good time to go trenching. If you're going to trenching, Friday.
Well, that's for Bitcoin, no?
This is for Bitcoin, but remember, all of this is just like reflexive. Let's do the same thing with Sol. It's the same, but it's the same turd rolled in a different colored glitter. And you know, you can see the same with Solana, that we've got that during the week, and this is all reflexive, meaning it causes positive feedback loops within the Solana ecosystem.
Mm-hmm. Wow. And
so if you want to make money from the trenches, it's much easier to do it when Solana's going up than Solana going down.
Yes.
In fact, it's really quite difficult to do it when Solana's going down.
It is, yeah, because like even you cash out your position is still down if you get it to US dollar. So
yeah, and so there's a couple of implications of this. The first, especially if you're mostly long meme coins, and I'm mostly long most of the time, anytime you can find a good play on the short side, you should take it, just because it's going again, it's hedging most of what you're doing. You know, you've got a bag of this, you've got a bag of that, you've got a bag of this, and you see a short play. Well, short plays are, technically you have to understand a bit more stuff. You have to be a bit smarter. It's sort of, your opposition's using leverage, so it makes it harder for them. It's a much easier way to make things. And when you start seeing listing pumps, you know how like a couple of months ago, everything that got listed on Binance was an immediate like 10x pump?
Yeah.
So what happens is people start front running that. And then the 10x pump becomes a 5x pump, and it goes from a 3-day pump to like the 1 day pump. And then now we're in the stage where people have front run that so much that all of the new Binance listings are down only. And so this is the life cycle of the trade. Like what is, and you saw that with the sniper bots.
Yeah.
That used to be a trade, and that trade wore itself. It got front run until it was nothing, right?
Exactly.
So the same thing happens with listings. The same thing happens with almost everything that's a good trade. We'll get front run.
Yep.
It makes sense. And then it flips.
Yes, exactly. Like the number of messages that I received. Hey, do you have a bot that buys automatically when the tweet gets out? Guys, you have to set that up before. It's like you're 1 month too late. I think like
a month too late or short. And
it's like
you need to kill yourself. Like
it's like the ovary. Like there's only one who goes in or two, but then once it's done, it's done. It's like you gotta wait and find something else. So now an interesting one that I found, and it's, you know, when the token is migrating from pump fund to radium.
Oh yeah.
It was at the beginning pretty hard. You needed to have tools to snipe it, and now everyone can do it. And there's a guy with a Solana address that you would love. And he is sniping just before migration. He's buying it all. He make it migrate and dumping right on it. And in the past 10 days, he made $2 million out of the guys in the trenches.
Is that correct?
No. Let me show you. Because I can't say the word. So I find it like really, really, really good. I have a video coming out on it.
It's in the trenches, such racists. Like all the group chats I'm in, it's like GMNIGGER. So, oh, for fuck's sake, kids. Like, fuck off.
Up. There we go. Let me show you the crime scene. That's why, like, this guy, I always have it in my. That's his address. I always track him because, like, I know that if he's in the trade, like, I could think, like, oh, this shit is going up. But he's actually just, like, he's buying and then selling it right away. So let's say, for example, Robinhood, he bought 9 SOL just before migration, you see on Pump Fund. And then he dumped here for 6 SOL. So on that one, he lost. So he doesn't win all the time. But he's doing it for all of them. Like on Llama, for example, he took away 4 SOL. And then all those things like go down the drain after that.
Yeah. That's amazing. And his trade will stop. Like if you're watching this and you're thinking, I can code, I'll code that. Like by the time you get the code deployed, that trade will probably be over. The life cycle of these things is a couple of weeks, right?
Yeah. And then also, I think it is. And then as soon as you spotted it, you kind of like too late. Like,
well, if you spot it, the game is as soon as you spot a new trade, and Robot James, who you should all be following at the Robot James on Twitter, is best trader I know. You want to get your money funnel stuck in the thing's neck straight away. So what that usually means is initially you're going to be trading things, even if you're a fully out like we're a fully algorithmic trading firm, like proper quant firm, and we'll click trade. When we see a trade, we're not doing like complicated business plans and building up infrastructure. We're just like, there's one of us in the audible clicking manually, because you want to get the best bit is always at the start. With any trade, as soon as you identify it, that's the glory days of the trade. And if you say, oh, I got to find a dev, oh, let's make it perfect, oh, let's put a nice UX on it, like fuck all that. You just start earning like straight away. And you never get enough out. You always look back and go, fuck, I could have taken more out of that. Could have taken more out of that.
Yeah, I think you're right. Like it's, if you do like anything algorithmic or whatever, like if you find an edge, try to systemize it the simplest way is, even if it's manual. But it would be the same in business. It would be the same in everything. Like
so let me give you an example. If you're trading large cap trend following stuff, which is what I do, like I've got
explain trend following quickly if you don't.
Trend following is you buy the stuff that has gone up recently, and you short the stuff that's gone down recently, and on average, the stuff that's gone up recently goes up more. And this is true. It only works on large cap coins for crypto. So if you were to run a bot that bought every crypto in the top 50 which has made a new high within the last 5 days, and hold them all, equal weighted, no fancy portfolio management, you can get very good returns doing that. Something so simple and stupid like that. And so what you want is an edge that's so big that even if you do the execution half-assed, even if you do it in a clumsy way, like trend following is such a good edge when we get trends that you can trade it with a potato. And for meme coins, you want the same thing. You want edges so big and so obvious that you can trade them with a potato. Yeah, that's it, basically.
Did you find any edge recently that you could share?
For me, it's just crime. So I look at, I want to see the thing bond on Pump Fund. I want to see the dumpers. I want to see the scalpers out, and I want to see who's held. If they've held their own coin and they haven't dumped it, if the big holders haven't dumped and the snipers are all out, then I start to be interested, not automatically, but I start to be interested if I see them try and manipulate the tape. So if I in one of my group chats, I see the name of a thing, I'll sit and watch an index screener for a few minutes, and I'll go, yeah, it's going down, and this same wallet keeps buying to support it. That's crime. And then I see the chart start to look like this lovely higher highs and lower lows, like thing that's not found in nature. I go, this is looking more like a crime. And then I'll wait till it starts to fall, and then I see them buying their own shit to support the price, and I go, yeah, I'll get in a little bit. I mean, you can't get much. And that's, I mean, there's plenty of different strategies, but most of what I get is from all the group chats. I mean, because I don't know, nobody's got time to do all the research. Like you're sitting in front of it all day. I can just trail off you. Like, you've given
Yeah.
most of my good cooks lately. Like, honestly, like you gave me Filecoin this morning. You cunt. Oh, fuck, you motherfucker. Nah, I'm joking. Yes, no, I'm not. I'm losing money. Cunt.
I didn't even check the accumulation or whatever on Filecoin, but yeah.
It doesn't make any difference once it's a big cap coin.
Yeah, it is. It is.
So forget the trench warrior stuff. Forget the on-chain analysis. Once it's got to a size, it's like it's its own new thing.
Yeah, yeah. I think it is. I mean, it's gonna depend on how people start to trade more and more on chain, but people just want convenience. They don't care about anything, because I think like when you trade on centralized exchange, you just have like. You just lose any edge you could have, and then it's them who had it.
The edges become what we call in TradFi finance risk premium. So you're just getting reward for taking certain types of risk.
Yeah, I mean, like literally, like a lot of like owner of centralized exchange goes to jail. Why? And it means like they like if you trade in their house, they choose everything that happened, I think. And because they have way more data than us. They have all the data about all the trading.
It's like when you're buying a used car off a really shady side of the road used car dealer. Like, he knows if the car's a lemon. So if you're making if you're making a really low ball bid on that car that he knows is about to stop working in 10 days, and he accepts it, well, you shouldn't be happy that he accepts it. So the way I explain adverse selection to people is, if you tap some guy on the shoulder in a bar and go, "Hey buddy, you want to fight?" and he turns around and goes, "Fuck yeah, I do. Them's fighting words." It's like, that's the moment you fucked up. Like, and we call this in TradFi adverse selection. So the trades that you get filled on that are easy to get into are usually the ones you don't want to take, and that's really. It's the first thing they teach you if you work at any quant firm. It's the first thing. Like, in fact, it's 90% of the Jane Street trader training is all about this concept of adverse selection, which meme coin traders are completely fucking unaware of, right?
Okay, so how would you apply that in meme coin, for example?
If someone has more knowledge than you, you don't want to trade with them. If someone is capable of influencing the price themselves, you don't want to trade with them. If someone is capable of pushing the chart wherever they want to,
at least not against them. You can try.
You don't want to trade against them. You want to ride along with the manipulation.
Yeah.
So if you think they have superior knowledge and they're buying their own coin because they're going to pump it, well, it makes perfect sense to buy their coin. If you think they have superior knowledge and they're dumping their own coin, well, fuck, you also ought to dump with haste.
Right, so he's trying to make out money from manipulation.
Yes, you're looking for a crime, and you're running towards the crime, and you're trading in the direction of that crime. And so this is.
I feel like it's like there's a protest and there's some looters, and I'm just gonna loot some stuff as well.
Just a little bit of light criming, like as a treat. Like you've worked hard all day, just steal this little bit of money off these dumb fucks, just as a treat.
Mm-hmm. And so what was your worst trade, actually? I asked you your best trade, which was on cacao, which is the most boring trade you could ever mention.
Trade I could ever imagine.
The worst trade you did. Hey, don't say accepting this podcast invitation as your worst trade.
My wife, that wasn't a very fucking good trade, was it? Fucking frogs. That's my worst trade. Well, and the worst trade was the one that went broke. I was over-levered on Australian beachfront property going into 2008, and I was in jail, and it was kind of hard to manage things from jail, and everything kind of went down, and I got margin called, and the banks wanted their money back, and I was in jail, and it was like.
Oh, so you had the trade on while you were in jail.
Yeah. And yeah, that didn't end very well for me. That was good.
Fuck.
Yeah, I was worth 8 figures when I walked into jail, and I was worth negative figures when I walked out. That was
Fuck.
that was
What was the trade on?
it was a whole bunch of things because I was doing a bunch of loan sharking. So I had a bunch of like second and third mortgages, and we were using it on. I was like a jack of all trades criminal. So I do some loan sharking, I do some smuggling, I do some this, a little bit of credit card fraud here, a little bit of that. A little bit of this, a little bit of that, sort of a criminal. And and it all came unstuck while I was in jail, put it that way. And my business partner was my best friend and my lawyer, and he killed himself when I got out of jail because he thought that I'd discovered that he fucked it. He stole some money, and he thought I'd kill him. So he killed himself in advance, and he arranged it so that I found the body. Like, he was my best mate, my absolutely best mate. And he arranged it so I found the body. And then, I'm just out of jail. I'm on parole. I'm exactly like, and this guy's like stolen $1 million from me while I'm in jail, and then mysteriously found dead, and I'm finding the body. And for me to try and convince the cops that I didn't kill him was like, it wasn't good.
Fuck.
It wasn't good. And the cops told his wife that they reckoned that I did it, and it was like,
Oh man, I didn't know that. Well, fuck, like that.
Mistakes I've made a few. I've made a lot of mistakes in that.
And it's better to just buy and hold Retardio now, huh?
Yeah, well, it's the future of money, dude. I like the metrics on Retardio. I think I track the way that the holders stay, the top 100 wallets, I track them all. People have gone through multiple 80% price swings, and none of them have left. And if they have faith in it, and it seems like a reasonable bet if we get a meme coin supercycle. So a lot of stuff. So let's talk about that for a little bit. Like, when would you hodl a coin versus dumping as soon as you can? You should always dump some when you've got the liquidity to. So you should always cash out a little bit when you get a pump. But I hodl a fair bit of Retardio, and when the other people aren't selling, where the community still seems to be strong, where it attracts new holders who have money in their wallets, even when the price is going down. To me, I'm happy with that. Retardio's down like 80% from highs, and
but you bought it at what? You bought it at sub 10 million market cap, no?
I bought it at 2 million market cap.
Yeah, so 2 million. Because I remember, I think you sent it to me, that one. You sent it to me. I remember I was on my way to my office in Taiwan, and then I received it, and I was like, okay. I clicked buy, and then after I was like, okay, that's interesting. So yeah, wow, interesting. And how long do you think, like you say, if we have a meme coin super cycle, didn't we already have it? Like, didn't we already had our super cycle?
A super cycle is where So what I see is that every normie person I introduce to meme coin trading gets hopelessly addicted to it. It's like the crack rock of trading. Like, I've got, copywriters and marketing guys. And
it's the TikTok of trading.
Oh, yeah.
Like, even you don't want it, it's on your phone, and at some point you're going to do it.
Well, we both have this mindset coach, Itamar, and he's made me promise not to stop it and promise to stop trading these fucking things. And here I am trading Farcoin today.
Why would he do that to you? What a madman. Like, never stop clicking, man. That's the number one thing.
Itamar is not a lot of fun at parties.
So, but why do you think it would be good for you to stop trading those then?
Just so I can be a better CEO. Like, the focus of running a company, and specifically an algorithmic trading company, is very different than the focus you need as a trader. As a trader, you need to be taking in as much information as you can, getting all your dopamine. Whereas as a CEO, if you're building a company, you want to make a small number of high-quality decisions a day. You want to be calm and relaxed, and ice baths and saunas, and eating clean and living life.
That's so true.
Whereas every trader I know is a drug addict or an alcoholic or got some heinous fucking secrets.
Yeah. I mean, the past 2 weeks, I had to say my trades have not been good in the trenches. My trenches trades like terrible. But then what I focused on, like the companies and then our algorithmic trading that we started, and then all that's been up. Like, all those numbers been up, and it's such a challenge to manage two at the same time. And luckily, I'm well connected, like with the investors boardroom and stuff like that. It's like a lot of the plays, it will be my other guys that find it, where it's like,
yeah, if you had to do that yourself.
yeah, so I'm way better off like trying to find edge and then say to someone, here is an edge, let me know, harvest it, let me know if it goes, because I do not have time to execute on it. And that's so true, like what you say, I didn't realize that, but yeah, it's like, if I start to trade shitcoins, I just wrecked my decision power of the day.
Yeah.
Just like, because every trade, every piece of information, like you have a battery of decision and you just take it off, and then you're going to take
the other part is your brain doesn't really know. You're looking at a chart, and to your brain, it's making that decision. Do I stay or do I go? Do I get in or get out? Do I sell or not?
It's horrible.
And you don't realize, because you're not actually doing anything, but you're actually wearing down your mental battery by looking at it. So you shouldn't, in my view, have the charts up on the screen and watch them unless you're doing it for a specific reason, like watching the tape, watching for something. You shouldn't be this guy sitting there with the 6 monitors looking at charts all day. Like, that's a good way to fucking lose a lot of money. Don't do that. Unless you're trading.
Yeah. Yeah, I think like the one important point that we have in this market with meme coin, and then that's why we could have like Supercycle. Supercycle means that it would last for a few years, right? Is that what you mean by that?
Well, I mean, I think, so my definition is a time where across the board everything goes up, instead of this. Right now we get a pump and that liquidity stays around, sloshes to 3 or 4 things, from Trump to Melania to Vine to whatever's today's fucking bullshit scam of the day, or like those AI agent things. You can still get big pumps in them, but that's not a super cycle. A super cycle is when everything goes up, when all our memes are up, when retail is running, when you go to the gym and all people are talking about is meme coins. That's the super cycle. For that to happen, crypto has to go right. Interest rates have to stay low. The economy has to stay right. Solana has to stay ahead of Ethereum, has to stay the head of the pack, and more people have to like meme coins. There's a lot of things that have to go right for that.
Can we have a super cycle though when we have pump fund?
Well, pump fund is net extractive, right? Like
exactly, because that's what I think is like these to an extent we say, okay, the money comes in and then flows in, and then like, because we know like this market is different from traditional finance, because when traditional finance, let's say you invested in Nvidia, you're like, it's going up, you're taking profit, and then you take profit into US dollars, and then maybe you're going to buy another stock. But the thing is, what we see with meme coins and with decentralized market is like you go from fart coin to stupid coin number 2. And then you didn't went into another one. Like there's a lot of the volume days like that. And then that's why something that goes down have a higher chance to go even further down faster, because it's like, fuck, this shit is going up. I do not have capital anymore. Wait, I have some fart coins here on that wallet. Let me swap it to that new thing that I like.
Exactly.
And then go like that.
By the way, guys, it's much easier by far than finding the coin that's going to go up is finding the coin that's going to go down.
Yeah. But you got to have both and yeah. It's hard though.
Billy, Hammy, Nub, any shitcoin that's like, it looked like it could, like Billy had a moment. People were talking like Billy to a Billy.
Yeah.
Hammy had a Peanut the squirrel. Yeah. We barely knew you, buddy.
Yeah.
Those things shorted are a much better edge than trying to find the next 1000x long.
So true. The thing though is, for example, I checked a lot people who were shorting Trump, for example.
Dumbass.
And they had big accounts because like guys will be losing $2 million, $3 million, $4 million. Don't blink an eye. Don't close the short.
Yeah, but that's...
And they made millions.
They're holding it long on the other wallet. That's why.
That could be.
Almost certainly. No one's doing an unhedged short of in size of the president's token unless they hold a big bag of the president's token. It's much, much easier to get out that way. I mean, this is really, really important to understand, is the game theory optimal way. If you're a Trump insider, you don't want to be hauled up before some Senate committee in 3 years' time saying, oh, you were involved in the Trump meme coin and here's your wallet dumping coins. Like, you don't want to do that at all. You don't want any part of that. You want some unrelated party to you, your girlfriend's second cousin, shorting it on exchange with collateral you said through its side wallet.
Yeah.
And if it goes up and you lose money on the short, you made money on the long anyway, so it all evens out.
Yeah, that makes sense. Yeah, that's why it's so fascinating. So
there's no second
the
best
thing,
market.
the thing is, like, how I see it, is there's still this market, right? But because people, I don't see retailers going in the memes and just buying the big memes and being happy with plus 30%, plus 50%, plus 100%. As soon as they're going to make a bit of money, they're going to trade shitters on pump fund and then give 1% in, 1% out. And then pump fund is been like extracting millions every day from, and then they don't put anything back in. There's nothing that goes back in. So but same will go with the trading bots and things like that. That would take 1% fees as well. I don't think
the trenches are going to be a big part of the super cycle. I think it's all these. I think it's the ones that are 20 to 50 million now, listed in sexes, like that.
Toshi was crazy one.
Yeah, I mean,
how could this thing be 1 billion? Come on, it's still worth me. It's like it looks straight up from like 4 guys who are like 50 years old who got in together. They hired a designer on Upwork or Fiverr, and they say, draw that blue cat, make it like that, and it's like it's as ugly as possible. And then because base, they're like, fuck, like no one is using our chain for meme coins. We've been like trying to pretend meme coins don't happen for like a year, but like fuck, now all the volume is there. Well, you know what? Let's do it. And then now we have ugly blue cat as $1 billion market cap.
Yeah,
it's
not.
It's crazy to me.
It's nonsense.
It is, but that's.
I mean, that's crime. Like you ought to trade in the direction of crime, like axiomatically.
Well, do you have any coins to chill before you leave?
Oh, Retardio. I'm a fucking Retardio.
Yeah, but you chilled it for an hour already.
All right. Well, what do I hold? Like as opposed to, what am I trading today? Tuesday, 28th of January. I'm trading long fart coin. I really like edges on the short side at ox.fun. Shorting new listings at ox.fun is something that you're looking closely at. The shit that I hold Michi right now. We got into a couple of days ago.
Yeah.
Big bag of Retardio, Sigma, lock-in, and, you know, a few. But it's mostly Retardio, Sigma, lock-in. I like those.
Okay, cool. Well, thank you, Scott. I will put the link in the description. And thank you for today. And I'd also have to thank you because you are the person that got me into on-chain analysis when you started to show me back then like a bit of Bitcoin and things like that. And then I dabbled a bit and then you're like, no, there's real signals. And then I went full in. So thank you for that. Like you've been a really good mentor to me for this. And
for guys watching this, Antoine was shit at trading. Like,
hey, I don't care, man. I was buying.
5 years ago, you sucked, and you're like, you've got this like popular YouTube channel. I'm like, what the fuck are people like? It's just.
Hey, I told them to buy. I was telling them to buy Bitcoin sub 5K, man. I was like one of the first video on the French market, like buy some Bitcoin sub 5K, and then that was it.
The channel was in French, so all your customers were idiots. So some kind of sense, but these days. You're fucking much better at this meme coin shit than I am. Like I think I'm okay. I think I go all right, but you're much better than I am. So you should take a little bow for that because you've diligently decided to not be a grifting fucking coal, even though you're a good-looking rooster, and you've diligently decided to be an actual trader instead of a fucking thieving scammy wanker. So like you should take a bow for that.
Thank you, man. Appreciate that. That's why it's the circle jerk. I see you, Scott. Bye. If you want to surround yourself with smart investors, then I recommend you to join the Investors Boardroom, which is by far the best community for learning on-chain trading, on-chain analysis, and combining those forces to find the next coins that are going to pump. This is what we do, and this is not only people who are watching what's happening on chains. You will find builders, developers, and people that help you distribute your product. Now, the Investors Boardroom is where things are happening for all the meme coin economy and the meme coin market. Check out in the description if you want to find the people that adapt the most in the market. If it's not enough for you, well, you can watch this video where it's my full strategy for meme coins and most of the stuff that I taught to Scott as well. So click here and I see you into that one. But don't forget one thing. Yeah, stay handsome. Ciao.